On June 25, 2026, Apple lost over $260 billion in market value in a single trading day. Not because of a product recall, not because of a lawsuit, not because of a scandal, because memory got expensive. That's it. The cost of the chips inside your MacBook and iPad went up, and the market wiped out $250 billion in response. Here's what actually happened, and why it matters more than the headline suggests. For the past year, the AI industry has been consuming memory at a rate the world has never seen before. Data centers building out AI infrastructure need vast quantities of DRAM and NAND flash storage. That demand has been so intense that it has completely reshaped the memory market. Contract DRAM prices jumped roughly 90% in the first quarter of 2026 alone, then another 60% in the second quarter. Memory that cost Apple $1 3/4 ago now costs them approximately $4. Apple's CEO Tim Cook called it a 100-year flood. Apple builds memory and storage into every single product it sells. Every iPhone, every MacBook, every iPad, every Vision Pro contains memory chips. When the cost of that component quadruples, there is no quiet way to absorb it. Apple faced a binary choice: take the margin hit and watch their profits compress, or raise prices and risk demand falling off. On June 25th, they chose to raise prices, mid-cycle, with no new features to justify it. The entry-level MacBook Neo jumped from $599 to $699 overnight. MacBooks, iPads, HomePods, Apple TV all went up. The iPhone was spared for now. The market read that move as an admission. If Apple is raising prices, the memory cost problem is real, it's large, and it's not going away soon. And here's the uncomfortable part. The same shortage that is crushing Apple is making someone else extraordinarily rich. Micron, one of the world's largest memory manufacturers, just reported fiscal third quarter revenue of $41.46 billion, up 346% from the same quarter last year. Their gross margin hit 85%. To put that in context, they briefly outperformed Nvidia on that metric, one of the most profitable chip companies in history. Apple is bleeding on one side of this trade. Micron is printing money on the other side. Same shortage, opposite outcomes. That's how supply chains work when a single bottleneck controls the economics of an entire industry. Now consider the supply chain ripple. Apple is not the only company buying memory. Every hardware maker on the planet, Dell, Samsung, Lenovo, Microsoft, is drawing from the same shrinking pool. Budget Android manufacturers, where memory can represent 15 to 20% of build cost on already thin margins, Apple can raise prices because 96% of iPhone users say they will buy another iPhone regardless. Smaller players don't have that luxury. Some will be forced to cut specs. Others will delay products. A few won't survive the squeeze at all. The timeline on this isn't short. Deutsche Bank has predicted tightness well into 2028. Intel's CEO has said meaningful relief is unlikely before that. Some analysts see pricing pressure continuing toward 2030. Micron itself is guiding fourth quarter revenue to $50 billion, which means they see no reason to expect the shortage to ease anytime soon, because a looser market would compress their own margins. Cook went further. He publicly urged US policymakers to ease restrictions on Chinese memory suppliers, which is a signal in itself. When a CEO of Apple's stature starts lobbying governments about component costs, it tells you that the company sees no easy internal solution. They can't build their own memory. They can't switch suppliers overnight. They are dependent, and they know it. Apple does have cushion. Their services business brought in nearly $31 billion in the March quarter, and that revenue continues regardless of what happens to hardware margins. The company authorized a fresh $100 billion buyback and raised its dividend 4%. The fundamentals haven't broken, but the narrative has shifted. For years, Apple has operated with near-perfect supply chain control. They design their own chips, they manage inventory with extraordinary precision, they squeeze suppliers across every category. Memory has always been the one major input they cannot control because they don't manufacture it, and the global supply is concentrated in the hands of a small number of companies: Samsung, SK Hynix, and Micron. When those three companies face AI-driven demand that exceeds what they can supply, Apple has no leverage. None. That's the deeper story behind the $260 billion single-day loss. It's not about one bad quarter. It's about the limits of vertical integration when the one component you don't control suddenly becomes the most valuable material in the technology industry. The iPhone 18 launches in September. Cook has already warned that more price increases may be coming. If memory costs remain elevated into the holiday quarter, consumers will be choosing between a more expensive iPhone or switching to a competitor who is dealing with the exact same problem. The question isn't whether Apple survives this, they will. The question is whether this is the moment the market realizes that even the most powerful supply chain in consumer technology has a single point of failure. And right now, that failure point is a memory chip the size of your thumbnail.